Okay, all right, guys. Good evening to everybody. Today is the 6th of July, 2025. It's a Sunday special. All right, Crazy Market Talk with Cal. All right, so everybody, can you see my PowerPoint slide? Yes. If those online, can you just nod your head so I see? Can you see my PowerPoint slide? Can? Okay, thank you very much. Now, this evening session itself consists of 35 different slides. 35. So if every slide I take about 1 to 2 minutes to explain, the whole thing will be about an hour plus long. All right. It's fully recorded. The video with the English caption will be only available tomorrow in the evening. And of course, if you talk about putting in Vietnamese, I think that will take some more time. Yeah, but nonetheless, let's just start today's session right now. All right, before we start, make sure this disclaimer applies as usual. Whatever I share tonight is all about the market. So that, of course, if you're using it for your personal trading and investment, do take note that you must do your money management. All right, so 5th of July has passed, all right? And everybody was talking about this, telling that Japan will get into tsunami and all this thing, right? But I said, no, I don't think it will happen on the 5th of July, all right? And fortunately, it didn't happen. So that was a good thing to begin with. But the done thing is this, we do know that, right, because of that, we saw 1,000 quakes happen, right, and causes a lot of unhappiness between some of the people in Japan due to the tourism being affected and stuff like that. Okay, the thing is this, why am I talking about this? Now it's over, right? I have a reason for that. Yeah, let me explain it shortly. All right, first of all, you can see this how bad it is. People really didn't travel to Japan because of this itself. Imagine that a plane got less than 20 people. Oh my goodness, that's how bad this prediction went all wrong itself, right? And the thing is right now, we do see that even our Straits Times also talk about this because of the ongoing earthquake in Japan. Okay, put that away first. Now, the thing is this, let's just go back to this lady. Who is Ryo Tatsuki, right? Okay, so she is a Japan Baba Vanga. Now, Baba Vanga is a very famous lady who passed on. She predicted a lot of stuff. And then the thing is this, so the Japan version, yeah, Tatsuki. So the thing is this, she has been pretty accurate. She predicted the Tohoku, this earthquake back in 2011, right? So that was what made her very famous. Now, this is the lady, all right, you can see this is a lady from, a very, very normal lady. And this is her other prediction, which is perfectly there because she predicted the pandemic, predicted the so-called, Freddie Mercury death, the Kobe earthquake, all right. Now, there's a very interesting thing that I want to share this with you, is that her theory, her prediction got one little thing is that it goes in a series of 5. That means, her prediction itself, let's say she put it today, right? Sometimes it's delayed by 5 days, 5 months, 5 years, or 15 years. Okay, that's in short the 5s. Okay, so I was just wondering out loud, just for the fun of it, yeah, for the fun of it, okay, if this July the 5th didn't come out, right, what's the next date, yeah? So I just give a number, lah. Maybe 12th of July, maybe 7 plus 5 equals 12, right? Or is it 5 months later, 5th of November, 2025? I think these are the next 2 dates that I'll be watching the market closely, that's all. Because anything more than that, it's all like 5 years later, 15 years later, I think that one, we leave it next time when we talk about this, yeah? So maybe just take note of this 12th of July and 5th of November, just for entertainment's sake, okay? Just for that, so, okay? I'm just going to take a picture of this to show that we talk about this. I'm not going to become the next Baba Vanga, yeah? Okay, now over on this Japan thing, over already. Now let's go into some serious note, yeah? Okay, now everybody been asking the same question, Cal. Recently, we have a very incredible V-shaped rally, right? Very incredible V-shaped rally. So what actually causes this to happen, right? So one thing to note, we can take a look right now, is that the recent rally, right, has took the 1, 2, 3, 4, 5, 6, 7, 8, the 8th placing in terms of the fastest short-term rally, all right, and one of the biggest. So in short, right, from the April the 4th to July the 4th, the market rally up 24.2% on the S&P 500. Now that is very, very fast. When you compare the other time itself, the next closest was back in 2020 during the COVID time, where the market recovered in 3 months more than 35.1%. Okay, one thing to note itself, right, is that because at the time the Federal Reserve smashed the interest rate down to 0 and they pump in a lot of money to save the day. So that is how the 35.1% came around. So the question is this, then this time around 24.2%, was it because of the same thing? My answer is yes. There is a very clear indication that the money came in from the Federal Reserve, just that they didn't say it directly, but the M2 money supply show it. So what will happen next is what we're looking at for tonight, okay? So the thing is this right now, look at the M2 money supply in May itself. Look at it. Oh my goodness, this is very clear. That means that the Federal Reserve has came in. They didn't say it as all, but this is a 19 consecutive monthly increase. So that basically tells you that there's a lot of money now in the market, and that is also why you can see right now the stock market is at the top. But we all know that this sort of movement, right, has its downside. Once is like basically like you put in like a bodybuilder, you pump in a lot of steroid, so he'll be big size for that moment. But once they realize it, right, it's a problem. And now what is the problem here? Yes, indeed. The US dollar purchasing power now is in a very, very bad shape, all right, like an internal bear market. So the thing is this right now, right, this is not going to be helpful. And we all know that now Donald Trump has get his big, beautiful bill, okay, up. So that means he's going to put in another easily between 5 to as much as $13 trillion, according to Ray Dalio, courtesy of this Benedict who showed me that slide, that link. Yes, indeed. Don't talk about this $13 trillion. Let's talk about something closer. This new bill itself, right, will easily add in another $3 trillion into the system, the deficit within the next 5 years. So definitely now you can be very, very sure now that the dollar is really going to hell. No kidding, guys. There's no way I can see the US dollar to recover in the near term. And that means that, right, there will be a very big move in gold, copper, and crude oil very soon. I repeat, gold, copper, and crude oil. Yes, crude oil. And you know right now, right, the Donald Trump in his bill is very, very siding towards the all the gas-related vehicles. That's why he literally pissed off Elon Musk. Correct? He literally pissed him off already now. And Elon Musk has created a new party. Okay. Oh God, I really wish him all the best because sometime we all know that two parties already been there for 100 over years. Suddenly now you get one new party coming in as an independent. But the difference is that this guy is Elon Musk, the richest, wealthiest man alive at the moment now. So this is going to be very interesting. All right, so the thing is this, some people argue, but currently now the corporate margins are doing very well. So what's the problem here? Yes, I cannot deny this. The corporate margin are very high right now. So that deservedly get where we are in terms of stock market. If you compare this in 1979 versus today, right? Of course, overall itself, the corporate margins are there. But the thing is this, do you notice that whenever the corporate margins are at the highest point, if you notice, all right, not everyone, but majority of it, right? Usually that is where the market, once the thing goes down, okay, once you see that the corporate margin goes down, very soon we will see a recession. Now, why is that so? That because US has this very bad habit, they do have pretty good companies, but they also like to borrow from the future. So when these corporate margins, right, seemingly doing very well, most of it comes without value. So it's a very different thing altogether. And this is what you're seeing right now, right? You look carefully, the corporate margins are actually starting to slip. So yes, we are at the high level, but on the no side itself, right, we do see the corporate margins slipping now. And this is very scary because we have seen before, once it slip, right, we may get into a recession. Now, I'm going to be very blatantly upfront here itself. I am very, very confident that we will see a technical recession by December 2025. I'm very confident on this. If the latest it will be by the first quarter of 2026. Now, I'll explain to you why later on, but the thing is this, I am that confident. Why is that so? I'm not trying to be a doomslayer here, but I'm just telling you that the issue with US right now, right, they are playing with fire. And this fire is going to be out of control very soon. Okay? And I can now understand why this Jerome Powell, he also would not cut interest rate so fast. Because to put it this way, US now means right, the Federal Reserve now is a private entity, right? They basically borrowed money to the US government for interest. So if I belong to this private entity, and I'm charging at 4%, while basically back in 2020 to 2022, where the boys borrowed from the US at 2% interest rate, and now re-lending it at 4% interest rate. Of course, I don't mind. Of course, I don't mind. So the boys are actually leveraging on this, making and squeezing the life out of the Americans. And then after that, right, they will do one thing, guys. Listen to me. They will kill the stock market. I repeat. Now, I know by saying this, it may not make anyone happier, but I'm going to be right up front here. So today's sharing itself is not for tomorrow thingy. Yeah? Please understand this. I'm not predicting things for tomorrow or next week. No, I'm predicting this for next 6 months to next 12 months. I am very sure they will kill the stock market next very soon. Now, why is that so? Because you see, the boys basically has been borrowing money or lending the money to the US government, right? So once this is all collected, the money is all amassed in a huge amount. Then after that, when they will let go of the stock market, the market will crash down. But you must understand this. When the stock market crash down, right, it's not only just a US stock market going to crash. The whole world, every stock market will crash. Bum, 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 come down. So think about this right now. If the whole stock market come down itself, who will benefit the most? Think about this. Can you tell me now, everybody? If the stock market crash right now, next few months, who will benefit the most? Please key in the comment box right now. A quick one for today, just to make sure that everybody is in here. Who will be? Which government? Which government will be benefiting the most then? Okay, the US government, yes, indeed, the US government will benefit the most. Why is that so? I can tell you this, I am very, very sure Donald Trump knows this, and he's part of it. He is basically really building something. And I believe that Bissell is giving him all the crazy idea, because Bissell is George Soros' good friend. So the thing is this, and now he is saying, Bissell is telling the whole world, the moment if the Federal Reserve, okay, Federal Reserve going to let go this Jerome Powell, right? Seriously, he don't mind become the next Federal Reserve chairman. And I can tell you this, he will be. Yes, Bissell will be the next chairman. I'm very, very certain. All right, my personal view on this, okay? Because he's a Treasury Secretary, and usually Treasury Secretary will be likely one of the people be involved in health. I'm not kidding you. If not, they'll find someone that's going to be very, very obedient to do all these things. I'll tell you more in detail why I say that, okay? You'll see my point as we go along this. So the thing is this is a very complicated chart, okay? For those people who like to see some complicated chart right now, this is for you, okay? So in short itself, right, this person is a king of charts accordingly. That's not me. Now, he said that there's a massive inverse head and shoulder coming in. And he says that the Donald Trump Big Beautiful Bill could be a catalyst for the sell-off, okay, which I totally agree with this statement of his. All right, here, okay. And then, of course, there's this, everybody now talk about this golden crossover, which is here. And everybody says that now the golden crossover is in, so that means the stock market will do very, very well. But we have seen it many times before. A golden crossover usually means the start of the big selling. So that's how the boys work. They make everybody believe that something going to happen very soon, then they do the opposite direction itself. All right, so that's why I think that if you like this chart, you can take a look, take a picture of this. But to me, it's too complicated. I like my chart simple, easy, and consistent, right? So I skip this guy. Okay, there's a question here as well, right? By the way, you can ask me questions along the way. Anytime you want to ask me questions, I'm more than happy to just share with you. Okay, Yong asked this question. Will Hong Kong and China affected by the Dow crash? Definitely, they'll be affected. They will not be unharmed. They will be affected. Taiwan will be the first one to get hit first, then followed by Hong Kong, then China. Yes, indeed. They will all be affected. You can't run away from this. This is a massive plan created to basically buy things cheap. Okay, so now let's talk about this here. So what the US trying to do now is that they are trying to basically get a lot of money already, which they had. So the next step they will do is that they let the market really come down. Then all the share in the market get very cheap, right? And then the US and the big boys will all come in to buy and buy. Exactly like BlackRock, they've been buying so many companies. Literally, it's all right. A lot of companies now are all bought by BlackRock. Yes. So that means that they're controlling the world, and that is why US is able to control the world, not just because of firepower, no, because everything is all right. You can see that any entity that is big is being the shareholder itself is BlackRock. Yeah. That's why the total asset itself right is now about $4 trillion already. It's ridiculously big. It's massive. All right. So Joe is asking me now, Canadian dollar, will it be going down further? Yes, it will. But because Canadian got a bit of linkage with the commodity, right? So maybe the downside might be limited, yeah? Maybe, yeah? Okay. Will the bond market be affected? Definitely. The bond market will crash. The US bond market will crash. Yes. I am very confident. I'll show you later in a chart form why I think so. Okay, so let's look at this CNN business thing first. Okay, this is CNN Fear and Greed Index, right? Let's take a look here. Now, please understand this. I repeat myself, I'm not a doomsday guy, but the numbers are very clear that I'm very certain the next 3 to 6 months, right, you will be able to make a lot of money in the market by doing certain things. Then after that, right, when the market bottom out, then you can buy cheap again and you can buy all the way for the next rally already. Okay, so let me bring to you this one. Yeah, this is the CNN Fear and Greed Index. Okay, now the thing is this index itself, right? Yesterday was on Thursday was 77. On Friday it closed to 78 already. Okay, so what happened itself, right? You can see this is very important. Now look at the timeline. Now timeline is basically the closing price of the Fear and Greed Index. Now, I have been covering this all my life, okay? I can tell you that. And I tell you this, the accuracy is impeccable, all right? Really, if you believe in this theory, right, you just have to listen to me. Within the next 3 weeks, definitely itself, the stock market will come down. Within the next 3 weeks, yeah? All right, not tomorrow, yeah? 3 weeks within, okay? Why is that so, right? It's a proven thing. So I write down properly first, 3 weeks. Okay, 3 weeks time, the stock market will crash. How many percent? Well, easily between 10 to 12%. No kidding, yes. I believe that the stock market will go down within the next 3 weeks by at least 10 to 12%, right? Depending on whether they're going to save the day, but at least the pullback will be there. So I'm writing it down for you. Okay, I saw the question here itself. Will the gold crash together? Definitely it will go down first. But before I go down, there will be a spike up first. I'll show you the reason why later. So you have to stay all the way to the end of the session today, because today is really crazy stuff, yeah? A lot of things to share, and this is only like 1/5 of the size only. Okay, got the idea, huh? Okay, stay tuned and stay tuned, yeah? Okay, now let's just go down the road. Okay, now first of all, you can see a few things here. This is called the S&P 500 versus the 125 moving average cell. Now, almost every time when the market is too far away from the moving average, right, you do see that the market eventually will bring down to meet the moving average. Okay, all right. So now where are we right now? We are actually here, while the moving average is here. So we take this away. We move the mouse over to the area. Now, I've been doing this every other time, and I tell you this, my track record for this is almost perfect. That means that whenever I talk about this thing, it's all right. I can tell you this within 2-3 weeks' time, things will happen. Okay, so now we can see that S&P 500 now closed at 62.79. The 125 moving average itself is 58.22. So we're talking about between 6279 to 5822. The difference itself is about 400 points. So about 180, yeah, 400 points. For 400 points is definitely about 8% from where are we right now, at least 8%, yeah? So the thing is this is actually very scary. They will pull back together. That means that the index will eventually pull down to the moving average. It will, okay? Just take my word for that, huh? Then you can see that now the stock price strength is now at a very extreme level, whereby everybody believes that there will be no more downside, everything is good, and that's why we're at extreme. The last time we saw this was back in February. Now, put it down, please write down. February 13, 14 is the last time this year we saw the stock price strength at the top. Write it down on a piece of paper because we are going to review it later on. Remember, it's 14 of February. I remember this day very well because I know that what happened on Valentine's Day. The stock market came down very badly, if you remember that, yeah? Now, the stock breadth now is also at a very crazy level. The level is basically back to October 2024. Write it down, October 2024. That is the time whereby the stock price breadth is at the heaviest, strongest, where the whole world thinks that this is the best time to enter the market. Remember that, write it down, October 2024. Okay, now all these things is not made up, but you'll see my point later. Now, the put and call option now, right? Look at it. The put and call option now is at 0.61. Oh my goodness. That means right now, right? I tell you this, your option traders, you should know this very well. That means that now, right, basically, no one want to buy put option. No one want to buy. Everybody went down to buy the call option. So the call option now, the premium is very expensive. The put is literally not there. So now you think about this. If I am a big boy, I sold the call option to you. I collected the premium from you. And then after that itself, right, if the stock market go higher, I had to pay you money. Do you think the big boys want to pay this money? Do you think the big boys will really want to pay this money? I can tell you the answer is no. So that means right now, right, if I'm you, I will basically buy a lot of put options. If not, I can sell a lot of call options. Now, selling call option is a bit dangerous because it's unlimited outside, yeah, take note of that, yeah. But you collect premium from the person, and then, of course, the risk-reward ratio itself is kind of worth it. Okay, so I leave it to you to decide. Remember, everything is being mentioned to you. You do your own risk assessment accordingly, yeah. Terrence, indeed, is right. The Dow Jones really peaked around that period of time, like 13 and 14 of February this year. And indeed, Richard, right, be fearful when others are greedy, yeah? Yes, indeed. So now the market volatility itself is at neutral ground. That's crazy because the market is at a high. How can the volatility be at the side? The only reason for that is because everybody is too complacent. Now, the safe haven demand itself is also at 5% crazy level. This is really observed. And the junk bond, oh my goodness, the junk bond itself literally have came down to a very low level. Okay, so all these are very clear issue problem. All right. So with that, I will tell you what will likely be happening, but we have to play by the year, right? So we continue to see this. Now, the US dollar is definitely in the hell position. The last time we see US dollar behaving so badly was back in 1974. Now, what was that? That was the recession. In 1972 to 1974, that was where the dollar has become practically worthless in a way, down by more than 10%, and everybody basically panicked. But that is back in 1974. That's even earlier than before I was born. So if you look back at the tape itself, right, what happened in 1974 is exactly the same thing. It's that basically that what happening now. So now US is doing the same thing to themselves. So that now think back for a moment. If history is to repeat, then of course things will go very, very crazy. So let's take a look here as well. This is the fund managers now. They are now the percentage of the investment in US dollar now is really at overweight, okay, underweight, most underweight. Okay, in simple English, underweight means that right, they are not buying or they are not involved in the US dollar. And this is going back all the way to 2005 back time itself. And you remember then what happened, right? The market basically came off. And now if you look at this right now, right, the US dollar again, this is a repeated chart, yeah, there's something here. Underweight refer to a financial asset being valued below its real value. An asset to be underweight is and yield a lower return than its sector. So in short, right, the fund managers now know that the US dollar is going to hell. So that's why everybody runs away from the US dollar. So the question is, if they run away from US dollar, where did they go, right? you got to answer correctly. You say euro. Yes, they went to euro. So euro itself, right, has a lot of room to go higher. I'll cover this in tomorrow's MAO. So today, too many to cover already, but you can take down, yeah, euro, dollar. Okay, so why am I so worried right now? Look at this. This is the S&P 500 dividend yield. This is the yield that is now what the companies. So the stock market S&P 500 now is at all-time high, right? All-time high. But the yield itself, the companies are earning is now at the lowest since 2000. So which means that the companies are not making money. It's only the few handful companies that are making money. And they are not paying enough to the shareholders. And the thing is this right now, there's a lot of report coming out and says that right, the next 10 years is one of the lowest return in terms of dividend. So unless you're telling me you concentrate on Nvidia, Meta, Google, Amazon, okay, those companies likely they'll benefit. But the stock price now is so high. So what you're going to do, if you buy the stock at a high price and the stock price plunge, you will lose in capital. So you may get back dividend, but you lose a lot on the capital. So that is going to be helpful. So for people, right, who's invested in the S&P index fund, right, I will seriously think that you should get out now. I repeat, those involved in S&P ETF fund, I think it's a good time to get out now. You can buy back later. This selling will not be like a calamity selling, crash down and then for years. Sorry, this selling will be only for a couple of months. The selling will kick in. The downside will be limited. The downside will be limited in terms of time also. Because the Federal Reserve will eventually have to cut interest rate by September, right? July is confirmed don't have already. So September itself will definitely be it. Give me an outlook on the cryptocurrency market. I'll come to that later. Yeah, crypto, actually, I have one for tomorrow's MAO. Today, I don't cover crypto. But I'm very confident to tell you that crypto, Bitcoin will see 130,000. 100. So I'll write down first. Bitcoin will see 130,000 by December 2025. Okay, this is my prediction. It will hit. And I'm very confident it will hit. But from now till then, there might be a pullback first because of the whole, if this, whatever I focus tonight, really manifests, the market will shake. And when it shake itself, right, everything will sell. Everything will come down. Then after that, that is where you buy, and that's a bull. There's a big bull market will happen for stock market and everything. You will rally up all the way until 2027 really. So this is the best time to go into the market to prepare for yourself. Yeah. So for people who really buy my idea later, I'll tell you what to do. Those people who really buy my idea, who really thinks that the market is going to go according to my plan, right, I'm going to offer you something here itself. You can copy my trading by basically copying AIMS trade. It means that I'll put my money in AIMS and I'll be trading the S&P 500. Okay, and then you can copy my trade itself. All right, for those who are copying me, it's all right. Stick it down there. We will do the reparation. Back then, it was disastrous. I had to admit itself because I was not around. But this time around, all my roadshow is over already, right? All my friends in GAs are all preparing for the big business. I can concentrate on this. I can tell you guys, this is going to be a big one. We really need to pick up the bones right now and go for the kill. All right, I'll tell you more in detail shortly. Yeah, for those who are listening here out loud. Okay, so now you see this thing. Look at the market breadth itself. Look at it. It is really, really bad. All right, in this technical analysis, meaning right now, how many individual stocks are participating in the market move? That means we're talking about really very, very low numbers of stocks that's participating in the S&P 500. To make it into simple English, okay? The S&P now looks okay, but it carried by a very small number of large stocks like Apple, Microsoft, Nvidia, Meta. They are the one that's holding up the S&P. So which means that right now, right, the moment the significant seven break down, we're going to have a big issue. I can tell you this, the company that I'm very, very confident will break down very soon is this company, Tesla. I can tell you that they will go for the hell on this guy. I mean, put it this way, why would you want to create a party out of nowhere? Seriously, Elon, what are you thinking about? And the thing is this, all right, the fastest way to deplete this party is to basically reduce the wealth of the person called Elon Musk. I can tell you this is all right. This